Welcome back to another video at Trading IQ where we will learn the unlimited nature of the stock market. This is Shourabh Bhattacharjee, and in today's video, I am going to share with you the most important chapter in the stock market, that is volume analysis. And I'm going to share a couple of charts and show you some examples on how huge volume breakout of a key resistance level is significant. Whenever you're buying a stock, whatever plan that you might have, it has to support heavy volume because volume is king. Volume means what? Volume means the transaction of shares. How many shares exchanged hands, right? So when you see big volume numbers on the chart, such as 250 million, 1 billion, what does those represent? Those represents the number of share exchanged hands. Those do not represent the actual shares bought or sold. So those represent shares bought and sold. Exchange means what? You are buying something and someone is selling you. That's why you are able to buy, right? That's what volume represents. Now, on a given week, if you see a volume is high enough compared to its past performance, and on that particular week, if you see a price breakout with a heavy candle, heavy green candle, what does that represent? Most of them have been bought, and those many number of shares cannot be bought by retail investors, right? So we could assume if the price breaking out with huge volume that some institutional investor or big hands are coming into the market, and that's when we should be entering into our position, because that is the ideal time for you to enter into a position, because big hands are solid hands. They are not here to just pump and dump. And of course there are some cases where you would see huge breakout and then immediately after that you see a heavy decline. Those are prime examples of pump and dump. There are institutional investors are doing that as part of the day trading, but that's why it is important for you to check on a weekly format, because if you're looking on a daily chart, all the domestic institutional investors are participating in day trading. So you might see huge volume pump on a given day, but they have to sell it by the end of the day. That's why you might see that heavy breakout of a key resistance level and then it broke out of it immediately after it, because they have to sell it, because they are doing day trading, right? It's part of the game. So that's why checking price on a weekly format is very important. So now I'm going to share some examples on the chart and share some multiple stocks and from different industries, because I was looking at the charts, I was doing some analysis. So I wanted to share that with you so you can also understand. I'm going to share a couple of things. First, when there is a huge breakout of a key resistance level with heavy volume, why that is significant? And when there is a breakout of a key resistance level without big volume, like without the support of volume, then why this is not sustainable. So I'm going to share both of them on today's video. So please watch till the end. So without further ado, let's jump into my screen and let's do some chart analysis. So this is the chart of Blue Dart Express from the logistics sector. And I will share the prime examples that I was just talking about. So let's do some stage analysis based on Stan Weinstein approach. So after this stage 3 top, so this was a stage 3 top, right? And then it started stage 4 from here to here, right? So now after stage 4, you see after this point it was not going down and it sort of created a base, and this was the key resistance level. So let me mark it with red. This was a key resistance level because it was acting as a support here, which it and then here as well, and then it broke out of that level and it had gone into this base. So this is a clear stage 1 base, right? And after which it broke past of it. Now you look at the volume, right? So this is the whole comparison. So here you see a good group of volume, and you see from here to here what a huge rally, right? So let's focus on the current scenario. So here, as now you can see this huge volume, So this is the highest in its history, right? Since the inception in the stock market. And you see a subsequent breakout of this stage 1 base. So it is moving out of the stage 1 base and moving out of this resistance level. So this volume candle represents 1.39 million. So 1.39 millions of shares exchanged hands, and you see a huge breakout of a key resistance level with the support of huge volume, which means that there are big players in the market. Now, what happened with the price? So from 2,500 level, it saw about 400% increase, about to 10,000 mark. And after which it is coming down to this level. Now, let's analyze some other factors. So you see, this was a key resistance level from which it broke down since around 2015-16 time frame. It started stage 4. So this was a very important resistance level which it broke out of. Let me remove all this. Which it broke out of, right? But just look at the comparative volume. Do you see the volume? Right? It was merely 115k, 125k. The highest volume that it had seen, 1.39 million. So it was nowhere near close to that number. So the volume was dying down while it was going up. So while it broke out of a key resistance level, it did not have that strength. And when it does not have that strength, you see what happens? This is the reality. This is what is happening with this sector, with this stock. I'm not saying this is a bad stock, but I'm just sharing an example. When there is a breakout of a key resistance level, but there is lack of volume, this is what happens. And Stan Weinstein shared a lot of approaches, lot of examples on his book Secrets for Profiting from Bull and Bear Market. So this is that book. I would highly recommend it. So when there is a huge breakout of a key resistance level, there has to be a small pullback. Like after this breakout, you see a little pullback, you see a little pullback along the way, and these are all healthy pullbacks. But when it is breaking out of this resistance level, it has to be trading above this resistance level for it to sustain, but it does not have that volume, and that's why it is kind of breaking out of this key resistance level and again coming below the 30-week moving average. I'll share another stock which is performing excellently well, Indian Hotel, and it is performing excellently well. So you see another key prime example of a volume breakout. So you see the comparative volume. This is the highest volume bar you see, 132 million, and you see a key. It was a stage 3 top before it broke down of this 30-week moving average and started stage 4. And it was during the COVID-19 pandemic. And once it broke past of it, you see how it broke past of it with significant volume. What was the level? 160. Now it is trading at 330, almost double in about say 1-2 years time. So that's how volume plays a key role when it is breaking out of a key resistance level, right? I'm going to share another stock which is in my portfolio. Of course, I'm not recommending anything, but of course, this is something that I have based on the similar analysis. So this was again a key resistance level which it broke out of with significant volume. You see the volume? Let me share. The volume is 4,479 and 544, or over 1 billion in just 2 weeks time. And it had came down to that level, and it had rebounded from that level, and you see the volume had died down. Though there is a decline, you see the volume, comparative volume had died down significantly. Means what? This is a very good demand zone, and sky's the limit. You see, I would not recommend anything, but this is just some examples. And so one thing I would highly recommend, whatever plan you have based on whatever chart analysis that you do. This is part of my analysis that I do, and it is totally influenced by Stan Weinstein's stage analysis. So again, whatever plan you have to stick to your plan. And whenever you see an opportunity on the stock based on whatever plan you have to execute your plan without thinking of what will happen if I lose money, what will happen. And so see, whatever money you'll allocate, first you have to make sure that that money you won't require for maybe a 1 year, 2 year, 3 years, or for a certain number of time. Because see, you cannot expect return in 2 months time, in 1 month's time. You have to give it time, and once you give it the due time, the profit that you will see, you would never imagine that much of money you can ever earn from stock market. So you have to give a due time in the market. You have to spend due time in the market for you to see its profit, for you to see the compounding effect that the market has. So while I focus on heavily on the chart analysis, which I follow based on this is my trading plan, but I heavily focus on trading psychology, how I shape my mindset. Because once I'm into this stock, I cannot think of what will happen. It is going down. Oh my God, I'm losing money. Oh my God, what will happen now? No, you cannot do that. You cannot add stress to there are a lot of other stress that you have to deal with. You're not only doing stock market investment. There are a lot of aspects in your life, right? You have to look at your family, you have to look at your job, whatever else that you have to look at in your life. So you cannot add on stress after you purchase any stocks for following your plan. So you got to stick to your plan and just forget about it, because it is part of your plan. And you have to automate most of your plan, like use GTT order, put in a stop loss in the market whenever there is a heavy decline, like a stock market crash. You would get away immediately, automatically, without having to log into the market and doing the manual stuff. So this is how you should look at stock market investment. I hope you like this video, and if you do, please subscribe to my channel, like this video, share it with your friends, and I will see you guys on my next video. Thank you and have a great day. Bye.